Everyone talks about the Magnificent Seven like they're all untouchable. But here's the truth, some of these companies have moats so wide you couldn't cross them in a lifetime. And others? Their moat is basically a puddle. Today I'm ranking all seven from the weakest competitive advantage to the strongest. And I promise, a few of these will surprise you. But before we get into it, if you're newer to investing, you might be wondering, what even is a moat? The term comes from Warren Buffett. Think of a medieval castle. The castle is the business, it generates profit, it's valuable, people want to attack it. The moat is the water surrounding it. The wider and deeper the moat, the harder it is for competitors to get in and take what you have. In business terms, a moat is your sustainable competitive advantage. It's what stops a rival from copying your product, undercutting your price, and stealing your customers. Things like switching costs where leaving is too painful, network effects where the product gets more valuable the more people use it, and proprietary technology or data that nobody else has. A company without a moat, it can be great today and gone tomorrow. A company with a wide moat, it can dominate for decades. That's what we're measuring today. Let's get into it. Coming in dead last, and it's not even close, is Tesla. Look, a few years ago, Tesla had a legitimate moat, industry-leading EV margins, a supercharger network nobody could match, and a massive head start on real-world autonomous driving data. That was real. But here's what's happened since. Margins have absolutely cratered. We're talking mid-single digits, numbers that look more like Ford or GM than a tech company. Tesla has slashed prices over a dozen times trying to defend market share, and it's still losing ground in China to BYD and Huawei-backed EVs. The supercharger network? Other manufacturers now have access. The FSD data advantage? Still unproven at scale after years of promises. And don't get me started on the brand. Whatever you think of Elon Musk personally, the data shows brand sentiment has taken a serious hit in key markets. Tesla still has some moat, the energy business is growing, and FSD could be transformative. But as of right now, this is the weakest competitive position in the Mag 7. By a lot. Number 6 is Apple. And before you close the video, hear me out. Apple is an incredible business. $400 billion in annual revenue. Operating margins above 30%. A services segment doing over $100 billion a year at 75% margins. This is one of the most profitable companies in human history. But moat and profitability aren't the same thing. Apple's moat today is mostly brand and ecosystem stickiness. People don't leave iPhone because their iMessage bubble would turn green. That's real, but it's also fragile compared to structural advantages. The hardware moat has faded. There's no dominant product beyond iPhone. AirPods, Watch, Vision Pro, none of them are category defining the way the original iPhone was. And on AI, Apple is genuinely behind. Apple Intelligence has rolled out slowly and hasn't driven the upgrade supercycle everyone expected. China is a real problem too. Huawei has closed the gap faster than analysts predicted, and Apple is losing premium market share in the world's biggest smartphone market. Apple is still a great company, but the moat is more brand than structure, and that's why it's number 6. Number 5 is Amazon, and this one's a tale of two moats. On the e-commerce side, the logistics network Amazon has built is genuinely staggering. We're talking decades and hundreds of billions of dollars in warehouses, last-mile delivery, and supply chain infrastructure. Nobody is replicating that from scratch. It's a real moat. But e-commerce margins are thin. That's just the reality. The real moat at Amazon is AWS, Amazon Web Services. It's the backbone of the modern internet. Banks, governments, startups, Fortune 500s, they all run on AWS. The switching costs are enormous because migrating cloud infrastructure is a nightmare. So why is Amazon only number 5? Because in cloud, they face genuine competition from Microsoft Azure and Google Cloud, both of which are growing fast. AWS is still the leader, but the gap is narrowing. And unlike Microsoft's moat, which is baked into every enterprise workflow, AWS is constantly having to compete on price and features. Tremendous business, real moat, just not quite as unassailable as the top 4. Number 4, Meta. And the moat here is dead simple to explain. The social graph. 3 billion people use Meta's apps every single day. Facebook, Instagram, WhatsApp. Their friends are there. Their family is there. Their local buy and sell groups are there. You don't just quit Meta, you'd have to convince everyone you know to quit with you. That's a network effect moat, and it's one of the most powerful kinds that exists. And now add AI on top. Meta's AI-driven ad targeting has gotten so precise that small businesses are generating serious ROI on Meta ads. The ad engine is only getting stronger. The reason Meta isn't higher is that it's almost entirely dependent on one revenue stream, advertising. Nearly 98% of revenue. If something disrupts digital advertising, or if a younger generation truly abandons the platforms, the moat weakens. TikTok proved younger users can be pulled away. But for now, 3 billion daily users is one of the most powerful moats on this list. Number 3, Nvidia. And this moat is more surprising than most people think. Everyone talks about the chips. The H100S, the Blackwells. Yes, they're incredible. But chips can be copied. What can't be easily copied is CUDA. CUDA is Nvidia's software ecosystem, the programming framework that AI developers use to train and run models. Here's the thing, developers have spent years learning CUDA. Companies have built entire infrastructure stacks on it. The AI research community lives in CUDA. Even when AMD or Intel releases a competitive chip, developers don't switch because the software lock-in is too deep. That's a real moat. Nvidia controls somewhere north of 90% of the GPUs in AI data centers right now. The entire AI boom, every model you've ever used, was trained on Nvidia hardware. The reason it's not higher, this moat is newer and more hardware dependent than pure software moats. If a competitor cracks the software layer or if AI architectures shift, Nvidia is more exposed than the top two. But right now, formidable. And number 2, Alphabet. And this might be the most layered moat in tech. Start with search. Google has 90% of global search market share. Think about that. It's not a monopoly because they forced it, it's because Google search is genuinely better. And 2 decades of use has made it the default behavior of humanity. People don't search the internet, they Google it. Then add YouTube, the second largest search engine in the world and the dominant video platform globally. Then Google Maps, which has the most comprehensive real-world mapping data ever assembled. Then Android, running on 70% plus of the world's smartphones. Then Google Cloud, growing over 30% annually. Each of these is individually a strong business. Together, they form a self-reinforcing data flywheel that gets stronger every day more people use it. The only real risk: AI disrupting search. But here's the twist. Google is one of the best AI labs in the world. They invented the transformer architecture that powers ChatGPT. They're not just defending against AI disruption, they're driving it. Alphabet is number 2, but on almost any other list, it would be number 1. And the number 1 moat in the Magnificent Seven goes to Microsoft. And honestly, it's not that close. Here's what makes Microsoft different from everyone else on this list: enterprise lock-in. Think about every company you've ever worked at. They used Windows. They used Outlook. They used Excel, Word, PowerPoint, Teams. IT departments are built around Microsoft infrastructure. Migrating off Microsoft isn't just expensive, it's operationally terrifying. Companies just don't do it. That's the most powerful kind of moat. One where switching feels riskier than staying, even if a competitor is cheaper. Then add Azure, the second largest cloud platform, growing fast and deeply integrated into that same enterprise ecosystem. And then layer OpenAI on top. Microsoft's partnership with OpenAI gives it the most powerful AI copilot in enterprise software. Copilot is being embedded into every Office app, every Azure service, every workflow. Microsoft doesn't just have one moat. It has 3 overlapping moats: enterprise software, cloud infrastructure, and now AI, all reinforcing each other. When a business is paying for Azure, Teams, Office 365, and GitHub all at once, the switching cost isn't a number. It's an existential risk. That's why Microsoft sits at number 1. So there you have it. Tesla at the bottom with an eroding moat, Microsoft at the top with arguably the best competitive position of any company on earth. Quick recap: 7 Tesla, 6 Apple, 5 Amazon, 4 Meta, 3 Nvidia, 2 Alphabet, 1 Microsoft. Do you agree? I'd genuinely love to know where you'd move someone. Drop it in the comments. And if you want me to go deeper on any of these, the valuation, the AI angle, the risks, let me know. Subscribe if you're not already. See you in the next one.